We have a tax plan that targets tax relief to middle-class individuals and small businesses and ask those at the very top who've benefited as we've come out of recession to pay more.
Donald Trump and I have a plan to get this economy moving again, just the way that it worked in the 1980s, just the way it worked in the 1960s, and that is by lowering taxes across the board for working families, small businesses, and family farms.
Much like the presidential candidates, their running mates making it very clear the economy is key. We're back now with Omega Advisors Vice Chairman Steve Einhorn.
Steve, they're two very different plans, the Clinton plan and the Trump plan. What do you think we need to get the economy growing at a stronger rate, or are we going to be in this 1% malaise permanently?
No, I think there are policy initiatives that would help the economy grow better. I think it is clear that monetary policy in the U.S. and around the globe has done just about as much as it can do. I think we need fiscal policy, fiscal stimulus. My preference would be infrastructure spending that can both lift the cyclical outlook for the economy, but most importantly, lift productivity, which would lift then potential growth to the benefit of all. So to me, spending on education, job placement, communication networks, transportation would be a very good complement to existing friendly monetary policy. And finally, there is a need for such spending which has been lagging for a number of years.
Well, how do you make sure that...
Yeah, before you go into that, I just want to ask, 4% growth is possible in your opinion, or no?
I think 4% growth in the economy would be a stretch right now.
Okay.
See, just one thing. If we have that kind of fiscal policy, how do you make certain that the money that is okay to be spent is spent the right way?
Well, look, there is no certainty with respect to how it is spent. All we can do is rely upon the leadership in the White House, in Congress, to design and implement an intelligent program. We obviously in the past have failed in that regard. Our last major stimulus program coming out of the Great Recession did not do what it was intended to do and didn't give the economy the jolt as expected. I would hope this time with leadership in the White House and Congress, it could be intelligently designed and implemented to do what I described. Most important, you need a fiscal policy which will lift productivity and raise potential growth in the U.S. to the benefit of workers.
A business person would probably have a better idea than a career politician how to spend that money if it gets allocated, right?
He's getting some Trump sound bites in there. You know, this is interesting. I was last night I was with Mark Lasry. We had a debate. He was a surrogate for Secretary Clinton. I was a surrogate for Mr. Trump. And something came up, and I would like to get your reaction to it. We've got $2 trillion off the shore of the United States. The perception
at least $2 trillion.
At least $2 trillion. Mr. Trump thinks it's 5, but let's say it's between 2 and 5. The plan to potentially repatriate that, don't you think that will boost the economy?
Absolutely. If there is, and that's, I think $2 trillion is roughly the right number, to the extent that we could implement a lower tax rate on it, let's call that 10% just to pick a round number, that would be $200 billion that would come back to the U.S. That could fund over a several-year period substantive and needed infrastructure spending. But as importantly, assume that of the $2 trillion abroad, $1 trillion comes back to the corporate sector. They could use that $1 trillion for capital spending, for dividend payments, for share buyback. So it would be energizing not only to the infrastructure which the country desperately needs, it would be energizing as well to the corporate sector.
So this is a huge important point for our viewers. There's such positive externality from this type of spending. There's a multiplier effect. Jobs are added to the economy. Those well-paying jobs are paying taxes into the U.S. Treasury, Gary. And so what ends up happening is you get the growth and you get sustainable middle-class living standards. And so we got to figure this out. You know, left or right, we have to figure this out.
Well, I think at the current time there is bipartisan support for infrastructure spending. Likewise, there appears to be bipartisan support for some repatriation program with some debate surrounding the tax rate applied to those unremitted earnings. But of all the things that the government can do, this to me seems to be the most direct and most constructive in terms of the economy.
So you talk to companies and you speak to managements, and you've done this for decades. The congressmen, the folks in Congress that are against it, they say, well, how do you know that the company's going to actually do something to help the economy? If a CEO that you know is able to bring back this money, are they going to do something that's not going to benefit the economy to help grow their company in the business world?
No, I would think, look, a CEO is mandated to optimize returns for shareholders,
Yeah, it's pretty
taking
simple.
into consideration stakeholders. They will use the money productively, whether it's for capital spending, whether it's to lift dividends, which all shareholders benefit from, whether it is share buyback, whether it is a merger or an acquisition. They will intelligently, I believe, allocate the capital.
This is the biggest untapped opportunity for economic growth that's out there, that's just sitting in Washington, that for 8 years has not been able.
And that's why there's been a call for outsiders entering Washington and try to break up the rubble that's in Washington.
Yeah.
Let's talk about some sectors and some things that you like about the market, and where would you be, or where are you putting money, and where do you have money?
We're in a, as we indicated, a slower growth economy. So for the corporate sector, revenue is hard to come by. Profit margins in the corporate sector are elevated, so earnings growth will be challenging. So I'm looking for sectors that can deliver above average revenue growth, where there is margin expansion that allows for good earnings growth.
So where are we
the
going?
healthcare sector, recognizing there are some political issues there, I think is an attractive sector. It sells today at a 10% discount to the market's multiple. It historically has sold at a premium of about 20%. It grows revenue on a trend basis of 5 to 7%, well ahead of the typical company in the U.S. It can grow earnings on a trend basis 10 to 12%, about double what the typical company in the U.S. grows at, and it generates a return on equity in aggregate about 500 basis points more than the typical company. So here you have a sector with better revenue growth than the average company, better earnings growth, better profit margins, higher return on equity, selling at a 10% discount to the market multiple, and a sector, because of the political uncertainties, where investors have moved from a very substantial overweight position to a less overweight position. So healthcare, I think,
That's a very key point about what's happened in terms of the allocation of the last year, institutional investors, given the political landscape.
We appreciate your time, Steve. Thanks for being with us today.
Thank you.